The recent discussions between the Central Bank of Iraq, CBI, and the U.S. Federal Reserve have marked a significant turning point in Iraq's monetary and economic policy. These talks, which aim to enhance the stability of the Iraqi dinar and regulate Iraq's financial dealings with the international community, are seen as pivotal for Iraq's long-term economic development and integration into the global financial system. At the core of these discussions is the need for Iraq to maintain a steady exchange rate, manage inflation, and combat the illegal smuggling of dollars out of the country. In recent years, Iraq has faced economic turbulence due to its dependency on oil revenues and instability in the region, which has made it challenging to control the value of the dinar. Additionally, issues like currency speculation and the shadow economy have complicated efforts to establish a strong, stable financial environment. Through talks with the U.S. Federal Reserve, Iraq is seeking guidance, cooperation, and support in stabilizing its currency and modernizing its banking systems. These discussions also focus on Iraq's compliance with international regulations, particularly those related to anti-money laundering and combating the financing of terrorism. The U.S. Federal Reserve, as a key institution in the global financial system, has a vested interest in ensuring that Iraq's banking sector aligns with international standards, especially as Iraq's geographical and political situation makes it a potential hub for illicit financial activities. Strengthening Iraq's financial infrastructure and monitoring mechanisms is not just crucial for Iraq, but also for the broader stability of the region and the international community. A key achievement from these discussions is the advancement of tools and strategies aimed at reducing the illegal smuggling of U.S. dollars from Iraq to neighboring countries and beyond. Dollar smuggling has been a persistent issue in Iraq, contributing to economic instability and making it difficult for the central bank to control the flow of money in and out of the country. The Federal Reserve's expertise is essential in implementing policies that can monitor and restrict illegal dollar movements, thus improving the integrity of Iraq's financial system. In addition to combating illicit dollar movements, the talks have also opened avenues for enhancing Iraq's monetary policy tools. With the Federal Reserve's technical support, the Central Bank of Iraq is working on adopting advanced technologies and best practices in digital banking, which can help modernize the country's financial sector. This is particularly important as Iraq seeks to attract foreign investment and establish a more resilient and transparent financial market. The development of digital banking platforms and services would not only bring the country's financial sector up to international standards, but also improve financial inclusion among the Iraqi population, many of whom still rely on cash-based transactions. Moreover, the talks between the Central Bank of Iraq and the U.S. Federal Reserve represent a critical step in boosting investor confidence. By fostering closer ties with the U.S. Federal Reserve, Iraq signals to the global financial community that it is committed to achieving greater economic stability and regulatory compliance. This could potentially lead to increased foreign investment, which Iraq desperately needs to rebuild its infrastructure, create jobs, and promote economic growth in the post-conflict era. In conclusion, the advanced results of these talks between the Central Bank of Iraq and the U.S. Federal Reserve reflect the progress Iraq is making toward financial stability and economic reform. The outcomes will likely have long-term benefits, not only for the stabilization of the Iraqi dinar, but also for Iraq's broader economic future.